Meg Whitman once ran for governor, now she's running for cover. Let's talk to Reuters correspondent Ernie Scheider. Ernie, going to HP's earnings that are out today. The headlines from analysts say it all. Darkness falls again. Another worry, another leg down. More shoes, my personal favorite, more shoes than Imelda Marcos talking about another shoe dropping. Sales and revenue down, but some fuzzy math over at Autonomy leading to an $8.8 billion impairment charge.
Yeah, HP is saying that the charge is tied to improprieties, misrepresentation, and disclosure failures related to the Autonomy buyout first announced in August 2011. Really strong words out there right now. And remember, this was a company that was supposed to turn HP around. Autonomy does, enterprise data collection, really help, HP help its customers streamline the large amounts of data that they get in there. Then HP CEO Leo Apotheker basically saw this as a high-value business that would help HP manage its customers' explosion of information, as he called it. The HP board voted unanimously for the deal, paid a 64% premium. So a lot of faith that this business would help succeed, basically coming out today and basically saying serious accounting improprieties. Maybe they paid too much. They definitely paid too much.
Well, the former head of Autonomy, there's a lot of finger pointing going on here because he's saying, look, due diligence was done. It ain't my fault. And of course, Meg Whitman, she was on CNBC today saying, we stand by what we found. We think this comes from the Autonomy side. But it was suspect, I think, at the time that they had overpaid possibly for Autonomy, and now this comes out.
Yes, last quarter they, HP took a nearly $11 billion charge for its EDS acquisition,
right.
And the rumor on the street then was, geez, when is Autonomy going to come? So today wasn't completely a big surprise out there right now, but still it's one more thing for Meg Whitman to have to deal with. She came in, she was heralded as kind of, someone that would help turn them around.
Yeah.
This is, as you say, one more shoe to drop.
One more shoe to drop. Imelda Marcos, okay. Still out there, shares down 10% today and weighing on the markets today, but let's take a look at the broader markets and see how they're doing, because we now actually have some green arrows, and we kind of flip-flop in a little bit today, but some housing starts news in October was the best in 4 years, so that's helping to turn things up. We can see some housing stocks here up some around 5% or so.
Yeah, I mean, it seems like every day now we've got positive housing news. This definitely is sort of a twilight zone. Geez, the past 2 weeks these stocks have been doing really, really well. Who would have thought we'd been here?
Who would have thunk it? Okay, let's move to the hot spot. As we do, remember, folks, snaps, bottom of the screen, more news of the day. Ernie, upside down world, sometimes we have it here on Trading at Noon, because these companies, we're used to getting bad news from them, like HP. Not so today. Turning things around, Groupon in the who'da thunk it world. Tiger Global sinking its teeth into Groupon, saying the hedge fund has, a 10% stake? So
yes.
Some confidence there in Groupon?
So remember, after Groupon's last earnings announcement was atrocious, its stock fell. Tiger Global basically coming out and taking this big stake the day after. Tiger Global is a technology-focused hedge fund, and they've been around since 2001 with the tech bubble and the tech burst. So they've been through kind of the ups and downs. They also have shares in Facebook and in LinkedIn. Clearly, they see value here. It's run by Chase Coleman and Forrest Dewan. They've been around the street a while. They've got a lot of experience and looking for value.
Right.
So this really is a vote of confidence in Groupon.
Okay, so Groupon stock up 13% today, although we should say it's well below, if we showed that scan, it's well below its IPO price of $20.
Well, it's still a daily deal, I guess.
It's still a daily deal. Nicely done. Moving on to Green Mountain Coffee, hoping for a shot in the arm from a new CEO that was named after the current CEO announced, 8 months ago he was retiring. There's been a long search. Guy coming from Coke.
Yes, Brian Kelly is coming in from Coke, and he basically runs their supply chain. So we have production of kind of the classic Coke cans all the way to distribution to the stores, the Walmarts and the Targets out there. So across the gamut. And that's, kind of a broad thinking that Green Mountain really needs as Starbucks, as Kraft, as other smaller rivals try to get into the space, especially in Green Mountain's single-serving coffee market, where they really have to protect their market dominance.
Keurig, right?
Yeah, the Keurig stuff. So the patents are expiring for some of its products. It's really got to get more aggressive and more dominant there, and Kelly's experience will help them.
Okay, so it was Lawrence Blanford, who is the CEO, had been there since 2007, turned the company around, but shares have fallen 41% in the last year. Today they're up 7%.
Yeah, and there's definitely investor base that's very interested in seeing this stock goes around. You have large funds like Fidelity in there. You have rivals like Italy's Lavazza in there. The founder, Bob Stiller, is in there. So a lot of people are still really want this stock to succeed. Maybe not Einhorn.
David Einhorn, right.
He's been very vocal about Green Mountain in the past, but there's still a very diverse base of investors that want Green Mountain to succeed.
Einhorn be damned, they say.
Exactly.
All right, let's move on to RIM, another company. We have not had much good news out of RIM. However, Jefferies raises RIM to hold.
Don't sell.
Don't sell. You're right. They're up 4% today.
Yeah, so Jefferies analyst Peter Mezek has been very outspoken about RIM in the past, and he's been very actively following the company. And we've talked a lot about how its market share has been taken over by Apple and by Samsung and by other rivals. So this is not certainly new here, but basically Jefferies is coming out and saying that the BlackBerry 10 operating system and new phones that should come out next year, probably have a 20% to 30% chance of success.
That's a ringing endorsement if I ever heard one.
Well, when you consider that before, it probably helped it to be, expected it to be a complete failure.
Yeah.
We'll take it, right?
And 30%. Wow.
Right. Exactly. Okay. And so that's, that's certainly a ringing endorsement, I guess, if we can call it that, from where they were before. But they've got to succeed. As we say, there's a lot of rivals out there.
Normally, we've got your BlackBerry and we're ready to smash it against the wall.
Well, I've just, relegated it to the pocket. So, but it's there. But maybe in a few months I'll have a BlackBerry 10. Who knows?
You're protecting it now. You're right. Yeah, that would be good. You get a new one.
It's an antique.
It's an antique. All right, Ernie Scheider, thank you very much. And remember that our Twitter feed is very active. More headlines of the day. That is at Reuters Insider, and our YouTube channel is Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.